Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our weekly Bitcoin update, and the crypto markets have been selling off quite heavily the last few hours, so we've got a few things to talk about here. But before we begin, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and wish to show your support for the channel, then why not join Tier 1 for just £5 a month? You still bag yourself an exclusive video each week that won't be available on YouTube. Or why not consider joining Tier 2 for just £10 a month? You still get the same exclusive video each week, but you also get access to the public Discord. There are multiple channels where you can discuss things to your heart's content on multiple subjects with all other Discord members, including myself. You also get access to the entire back catalogue of my educational videos, including the Elliott Wave series, plus other technical analysis videos, including trading and trading risk management. I also host a live session each week via private link to the YouTube. Then finally, Tier 3, for £15 a month. You get all of the previously mentioned benefits from Tier 1 and Tier 2, but you also get access to my monthly dividend calendar where I list my stock picks for the month and all of the relevant ex-dividend and payment dates. You also get access to my stock rating system, which is an at-a-glance rating out of 30 based on company health, value and overall dividend quality. If you yourself wish to look up a specific ex-dividend date or payment date, tag me on the Discord and I can look it up and get back to you. Also, if there's a stock you're interested in and you want me to use my rating system on the stock that you have chosen, tag me in the Discord and I will get back to you with a score. Thanks for listening, guys, and now back to the video. Okay, welcome back, guys. Right, before I begin, I just want to make a quick announcement. I recently made available last week's live stream for my patrons, now publicly on YouTube. That was the 13th of January. It was 5.5 hours long, and we went through a whole bunch of altcoins, plus a bunch of stocks and other stuff as well. So, you can now go and watch that on YouTube at your leisure. Now, it is a one-off. You will not be getting any more on YouTube. I'm doing it essentially as an advertisement and an enticement to join the Patreon, because I do these live streams every week. I did one yesterday on the 20th, and that was another 5.5 hour session that we spent looking at big tech, plus a bunch of other suggestions as well. Now, if that's the kind of thing that you're interested in and you want to contribute to that, you want to make suggestions of what you want to be what you want covered, you want to contribute to the live chat as well and take part, then consider joining the Patreon. But I will say, how about you give it till the start of next month now, start of February. If you were to join now, you'd be paying for a month's worth but only getting 10 days out of it. And I don't want you to do that. I'd rather you get a full month's value for your money. So consider signing up at the start of the month. So you've now got the luxury of going off and watching that live stream, 5.5 hours of info for you to dig through. It's all time-stamped. Enjoy it for the next week or so, and if you like what you see, consider signing up. Alright then, guys. Next thing I want to say is thank you to my patrons for joining me on the live stream yesterday. We had a right laugh. We had a very productive day doing a lot of Elliott Wave counting over the tech sector, and we also ended up going into a bit of a nostalgic rant for a little while as well. So always a lot of fun. Thank you for contributing, thank you for joining, and saying what you had to say in the chat. Much appreciated. So that's now fully time-stamped. You can go and watch that. The link on the Discord is still available, so feel free to, if you didn't have time to watch it or unable to attend yesterday, you can start digging your way through it. Anyway, guys, let's get back to Bitcoin. So, some significant price action occurring in the last few hours across the crypto market. Things are progressing as we've been predicting for weeks now. We continue to head lower, and what we're saying is this expanding flat pattern, and we're still approaching targets. We're not really, well, we're just entering a target box that I drew a few weeks ago, but it's a pretty big range, and I suspect we're going to head lower, as I've been saying for a while now. Now, before I get into the count, I'm just going to remove this. We're on the log chart in the day time frame. I just want to share with you something. All the levels that we broke yesterday and why we were snagging where we were snagging for the time we were doing it. So for some reason, there's an attitude out there. Most people don't have it who follow my channel, thankfully, and all of our patrons appreciate this. But for some reason, there's a group of people who say asinine stuff like can't do technical analysis on crypto. I can't even begin to imagine the depths of stupidity one must dwell within to believe this nonsense. But let's just try and set their minds at ease for a moment and enlighten that part of the community somewhat. Crypto is not only technical, like all other assets, it's extremely so. It's extremely so. And I happen to believe that this is a result of the contribution, the heavy bot and algo contribution to this market makes it even more so. So here's my fib pitchfork based off of the wave 1, wave 2 pivot of this cycle we're currently in since the lows of March of 2019. Okay, now 2018, December 2018, and January and February 2019, excuse me. We've come up into a wave 1 and wave 2. So the wave 3 has come up to 64,000, and an expansive B wave has come higher to 69, but it's not actually the peak of the move, it's simply a wave B swing here we're looking at. So here's the wave 1 invalidation point. The wave 4 in Elliott wave is now technically allowed to come all the way back to this, but not through it. Now I don't think that's going to happen. I think we're going to hold this pivot inside of this pitchfork here and find support before we continue higher. So let's just have a quick look at the price history of this pitchfork. So an early sign as to the validity of the pitchfork when we look retroactively in its placement is how much price interacted with it prior to the final placement of the pivot. Here's the pivot here, here's the pivot here. We had what we called median line interaction prior to the pivot actually forming, and then we have a back test of the median line here as well. From that point we can see channeling between 38.2 and 61.8, test of the 23.6, 50, 23.6, 50, channeling between these two levels. We come through the 23.6, back test it to the tick. We come through the median line, back test it to the tick. We go straight to the golden ratio from the median, hit it to the tick. We come back to the 23.6. We come through the 61.8, back test to 50. Through the 61.8, back test to 61.8. Carry on up, down to the 50, back test to 61.8. Down to the median line, fuck around the median line for ages. Down through it, back test the median line, down to the 23.6. Up above the median line, back to it, test it to the tick, test it to the tick, break it. Back test it to the tick, back, and off we go again. And so on and so forth. Okay, so as we carry on this, we then come up to the 23.6, snag around this, back to the median line, test it to the tick, back, break it violently, test the 23.6, la-di-da-di-da, 23.6, snag of it, and then finally the level we broke yesterday, which brought on the sell-off. We broke the 38.2 on the pitchfork, and we also broke a couple of significant technical levels we'll look at as well. Now, if you are wandering around the technical analysis universe completely blind, you'll be under the mistaken apprehension that fundamental factors are causing the sell-off. So you would have probably attributed this to what bullshit was out yesterday. That's it, Russia. The Russia bullshit. Russia's banning crypto. Okay, so that's probably what you'll be grasping at, like a drowning man grasping at straws. So then we come through, but look at what we did. Wick to the 38.2, wick to the 38.2, wick to the 38.2, wick through it, dragonfly candle. Right? Up, back to it, finally broke it yesterday, and now we're heading for the 50. We gave up a significant technical level, and that's why we broke down. Alright? So there's just the bloody pitchfork to start off before we get into any Elliott wave or any other kind of support. So you can argue with me if you like, for those of you who don't believe it, and those of you who say things like you can't do technical analysis on crypto. I hope that's gone some way to convincing you, but I'm not done yet. So let's come in now and look at classic horizontal support, which is part of technical analysis. Right, base support, resistance. Previous resistance becomes support. Resistance. 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 Support. 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 Broken support. Nice simple horizontal line. And we don't even have to be that precise because we can take in a series of other tops and bottoms, can't we? Bottom that gave way yesterday. Another high, another high, another high, another high, another high. Okay, but just using a line which is about as specific as you can get, you can see the importance of this level. Now there's going to be people who have recognised also that we've got a peak, another peak, and another peak. right? So this looks like a head and shoulders. So if we were to take this length from here, okay, and we would just drag it over here, right, we've got a potential very, very basic way of doing some technical analysis of the kind of lows we could be looking for, somewhere in the mid 20,000s. Now it's probably going to be in line with one of our lower targets for the expanding flat, isn't it? Now obviously it doesn't have to go that low, but it's a possibility. So another technical pattern which seems to be on the verge of breaking if it hasn't already broken. Right, so now let's come off of log, bring up the count, and look at a few other things. Let's bring up the bearish count because that's the one that's been in play this whole time. The regression channel still holds, and although I like the 3 and the 3, I haven't liked the 5 down here. I continue to bitch and moan and complain about it, but the fact of the matter is it continues to play out legally and continues to seek lower pricing, so I'm just going to have to live with it. There are alternatives which I prefer the look of, no doubt, but haven't necessarily got the same overall technical support as a larger pattern, and that's just Elliott wave. You might be onto the right thing, you might be onto 90% of it, you might be in the ballpark of it, but the theory is sound. Human beings, unfortunately, myself included, are fallible creatures who are not always going to be able to count everything precisely. It's just part of human nature. So carrying on. We're now, I think, let's bring up these levels here. The invalidation point for this having been a completed 5-wave move and then coming up in 3 waves breaking this channel, or coming up in a 1, 2, 3, 4, 5 into a 1 into a 2, which I mentioned in last week's video, hinged on breaking this invalidation point at 45 693 spot 17. Well, we didn't break it. We put in a wave 1, a wave 2, came back 1, 2, 3 into a 4, and now we're coming down in a 5. That's how I'm interpreting it, and we didn't break it, and we got a valid wave 4, so now we're heading lower. Now the 5, at any time it clears the 3, the 5 can finish. Okay, so it could be done now, and now we do all this and come out, and we've got a running flat, and it was a bit of a fake out head and shoulders. I've seen fake out head and shoulders before, because depending on, it could be a running flat, it could be a 1 into a 2, which doesn't come beyond the 78.6, or doesn't come all the way down to the 89, or it hits prior horizontal support, then reverses. These are all possibilities. I suspect we are going to continue to move within this channel, and we are going to seek out lower pricing. I've been saying that for a while, but we can turn around at any point, but it just feels like we're not quite done yet. Feels like there's still a little too much, from a fundamental analysis point of view, there's a little too much hope still, and a little too much confidence. We need people to be really despairing and giving up. Now I think we're almost there in the alt space. I've heard some absolutely diabolical, depressing, and downright I'm not sure what the word, doomsday kind of thinking going on in the alt space at the moment. So that's normally a sign that we're getting near a low, when people are throwing in a towel or getting close to. I personally feel we could still come down even lower than that. I think there's room to adjust discount and get us even lower. We'll see what happens. Anyway, that's the regression channel. These levels here, this is your bullish invalidation. Now we do have a bullish count, okay, which is that this is just a very deep 2 and this was a 1. Right, if we go beyond this, that counts off the chart, we can just delete it. Okay, so we might get there in the next few weeks. Alright, and then you've got levels down here, which is the 1-to-1 and the 78.6% extent retracement in log scale. Okay, so that's getting very close. That's at 34. Let's pop that on the line. That's around 33,846. But it's a very large target zone, as I pointed out before. Okay, we've just wicked into it. So we're technically in the target box. From the length of C compared to the length of our A in our flat, we've got 100% through to 161.8, which is a big ass area. Okay, but that's just the way fib extensions work with this pattern. It could be anywhere in here, but we have just wicked into it, so there is still hope that it is a running flat and we're going to come out of here, but I wouldn't bet on it, to be honest. If we do break this trend and we do reverse violently, then we can talk, but at the moment I see no reason why it won't continue lower. I've aggregated the fib channels with retracement fibs and extensions, and I've roughly come to this area 33.8 for a running flat. If we were going to get a pattern which finished before the lows, I think here, bottom of the regression channel, around this price, somewhere in amongst all this fib support and our point of control, if we bring up our fixed range, the yellow dashed line here, this would be, if we get a running flat, kind of where I'd expect it to complete. Okay, so that's something to look for. If we break these lows, we're getting an expanding flat, and I think a push right down to the bottom of the box is more likely at that point, and we're going to come down lower into the low to mid 20s. Okay, but we've got a lot of stuff still below us to hold us up, right? So it's still possible. So anyway, that's the bearish case. We'll leave. We'll take these levels off for a moment. Take off our target zone. Take off the bear case count. Get rid of this regression channel, and we'll bring up. Well, we'll talk the other options now. That's the primary. The bear case is the primary. We're coming down lower, seeking the C of the 4 in an expanding flat. So the alternatives. Right then. I'm sure I put on... You know what? I may not have saved it yesterday after the live stream, so I might have to do it now. So the bullish count. There's no doubt that this counts better as 3 so far than it counts as 5. I've expressed my concern about this being 1, 2, 3, 4, 5 and how it doesn't look like an impulse. It's still legal, but it doesn't look like one. This looks cleaner as A, B and C. Now if it is A, B and C, then I don't think we're done yet. 1, 2, 3, 4, 5. If that is 1, 2, this could be 1 and 2, and now we're about to enter 3, 4 and 5, right? At that point, we cannot come back beyond bullish invalidation here. So if this is a 2, here's the 78.16 log. I think the 89 is somewhere in that region in arithmetic. Yeah, here's the 89, which is the purple line. 78.16 log, the purple line as the 89% retracement, my aggregate for that support box, plus the point of control. So what I'm going to say, here's the point of control, is if this is a 1 into a 2, if it doesn't find support here, it's not gonna. Okay, 90% probability I would give that of not being a 2 if it can't find support here. It's got every reason to. Right, so from a bullish perspective, there's the total cutoff, but if we don't bounce somewhere in this region, I don't think we're going to. Okay, I think this would probably have to be deleted because we'd be likely taking out these lows. Now there's always a chance that if you break the 89 that you can still rally somewhere before the lows, right? A wave 2 can come back 99% and still be legal, but I think the odds are reducing, probably in line with the Fibonacci retracement at that point. Once you get beyond 90%, you're probably into a less than 10% chance of that being right. And every point it comes lower, that percentage chance is getting lower and lower the whole time. So we're already bloody deep, would be the point. Okay, so that's the bullish count. It's a zigzag. We've come up in 5. Right now, different people have counted this differently, and that's cool. What matters is where we end up. So some people have gone 1, 2, 3, 4, 5. No problem. I've gone 1, 2, 3, 4, 5. I just prefer it. All right. Both end up here. It doesn't matter how we got here. If we're saying a potential bullish count, we got here. So this is a 2 as an ABC, and it's going to have to be a shorter C than the A, but the C would clear the A, so it's still got the right look. It's just a shorter C. So that has to sort itself out before that low, and if it's going to sort itself out, it's most likely to do it here. So that's the bullish count. Now let's look at an alternative, which I bloody well ended up deleting by the looks of it. I really did not intend to do that. I must have not saved the chart at the end of yesterday's live stream. Silly me. So let's work on the basis of a double combination. So we're going to say 3 waves to here is a flat, 3 waves to here is a zigzag, 3 waves somewhere roughly around the lows is a zigzag. Then we'll get that A to C parity. So the way we would do this, now you could try and get an ABC in here and say zigzag, 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 and it's a double zigzag connected by a zigzag. Okay, which would be cool, that's fine. I can't get an ABC in here. For me, this looks like 5 waves. It just, you can't get many cleaner looking impulses than that. It just looks like 5 waves. So to say that this to here is a zigzag doesn't strike me as believable. And to say it's a double zigzag, so you'd have to have zigzag here, X wave, zigzag with a truncated C. I hate that even more. So I'd rather go with my A, B, 5 waves down in a C and call it a flat with an extended C. We're going to end up with an extended, horrible extended structure whether you do it as a double zigzag or an ABC anyway. So I'd rather take the 3, 3, 5 because the 5 looks clearer to me. But it doesn't matter how you've done it. If you're getting down here in 3, you're getting down here in an A or a W, right? So we can all agree on that. So let's just take my interpretation for the moment and say ABC into the W. So this would be minor. This becomes the W at intermediate degree. Okay, and we're going to need to slap on in log for the moment because it belongs to the bearish count, I think. The 1 and the 2, the 3 and the 4 and the 5. Okay, and these go up to primary degree. Like so. Come back off of log. So the 3 finishes here, not here, but here. And the 4 is going to finish here. A nice big 4. And the 5 is going to go up somewhere beyond where the 3 completed. So it could finish here, could finish way higher. My projections put it around 130 to 140. Okay, so I'm going to pop it there. And some people say 100k, some people say a quarter of a mil, but I think we will get higher, much higher in the long term, much higher. But I think once we finish that 5, I've got that as a larger wave degree 3, which means another big ass correction, probably a year or two, bringing us all the way back into here, because it's the prior wave 4, right? So we've got all that to look forward to. I think that will be the next proper shakeout that people really get completely effed up over. So that's something cheery to look forward to, isn't it? Okay. You'll know when it's here. Everyone will be to the moon, bro. Lambos forever, bro. Yeah, we're going to be rich forever, bro. Oh, it's going to keep going up. Here comes a million. When you hear all that, that's the top. Everyone's fucked. It's the exact same as when we get towards the bottom, right? Everyone's like, oh my god, the sky's falling. It's never going to recover. Crypto's dead. Russia and everyone's banning it. We're never going to recover. That's the time to buy from the fundamental perspective. So now let's carry on the ABC. A, B, C. Now, what I like about this, even though I have kind of fallen in love with my own flat pattern, what I like about this is it accommodates a 1-to-1 for the C. Alright, so we get a beautiful zigzag here. I think we've got a pretty, physically attractive one here. 123.6 for the C. I think that's really nice to the tick. Little more of a stronger C. Not coming to the 1618, so not fooling us into thinking it's a 3, but just giving us enough overconfidence for the bulls to buy a new high. To FOMO in, just clearing that previous high. I mean, that's a beautifully technical way of trapping liquidity for the people who want to get out. That is a little piece of technical genius, that is, to just fuck the right people at the right time. I'm not saying I admire it, it's just the way the world works. Okay, now let's subdivide this. 1, 2, 3, 4, 5 into the 8. And then this is ABC, and then this could either be 1, 2, which I think is more likely now, because we've got to get some distance down here for the... so we could get a 123.6 or more for an extended C here, but if we've got an extended C here, we could get that shorter C here. It doesn't have to relate, but something like that. That brings us down to maybe the mid-20s, I think. Right, and that would give us overall combination W, X. That brings us all the way to the 161.8. That might be a little too bearish. Alright, that might be a little too bearish. So what if we stick with the idea that it is 5 waves in the C, and we're going to get slightly longer C here, help trap liquidity at the top, and then a slightly shorter C here, which is slightly more bullish at the bottom. So like the opposite. Doesn't have to relate like that, but it's a possibility. So maybe put it here at the other 123.6. which is a little shy of the 1-to-1 between the A and the C. So here's the A, here's the B, here's the C down here. We're stopping a little short. Doesn't quite feel right to me, that doesn't know. It feels like it should be a little lower, but whatever. The idea is roughly the same. Combination flat, zigzag, zigzag. W, X, Y, double combination. Very similar to what we're expecting with our flat, which is 3, 3, but with 5 in here instead of 3. So that's an alternate count, so we'll put that in its own folder. I'm sure I did this yesterday. W, X, Y. I obviously didn't save it, so I'm going to save it now. Right, one more pattern to look at before we go, which is triangle. Now this could be the tricksy one, the one which keeps us guessing. It's going to be by far the most time-consuming pattern. This one, probably dragging us out well into summer. You know, looking at the way it would subdivide. All I'm doing really is just taking. So let's say we'd have to accommodate a zigzag in here. I think we could use the flat, but using a flat, we don't want that in the triangle. So we'd have to live with a very ugly ABC in here. Okay, but that's the best I can do. Where we just say A, it's got to be here. It's at the lowest. It's got to be at the lowest low. Let's say. So there's 69 days, shift the A to here, and this is going to be 1, 2, 3, 4, 5, A, B, C. It's the best I can do for the B, that subdivides as a zigzag. Okay, that gives us back to the high of 139 days. This would probably be the complex wave. It can still subdivide as a zigzag. We've proven that already. Okay, with the A and the B and a shorter C, right? It can come lower. This trend line doesn't have to be elevated like that. It can come lower. Could be here now, who knows? Alright, so we've got ABC. We've already said this is an ABC. Okay, so we could now get some kind of annoying complex wave in the D or the E. We could even maybe subdivide this as a double zigzag if we wanted to. Zigzag here, A, so A, B, C, W, X, and this could be a zigzag 5, 3, 5. So that could be W, X, Y, and that could be our complex for the triangle. You're allowed one complex wave in a triangle. Doesn't have to always occur. It's not a rule. If we're going to see a complex wave within the triangle, we'd expect to see only one of them. Alright, so then a zigzag for the D. And then an E. And then we go for the fifth. Lifting the platform, the launch pad for the fifth. So the 4, instead of finishing 3, 4 down here, which is what we're expecting in the other patterns, the 4 is actually significantly elevated, closer to 40,000, giving us a much higher launching point for the fifth. So maybe we could push our upward targets up higher, but this one is death by time. You know what I mean? Where it's like everyone's getting impatient, and this is going to screw with people the most. A lot of people, though, will feel more confident with this if they are maybe familiar with Elliott wave, because triangles, once they do confirm this D wave and then reverse again, pretty much you get a lot of certainty from it. Triangles can only occur in B waves, X waves, and fourth waves of an impulse. And if we see a triangle here, that's absolute certainty that we've just completed a fourth. So we know we're going higher in a fifth, and we know that we need to completely get out prior to the fifth's completion. Okay, so we can enjoy the profits as we make new highs, but we've got to start unloading as we approach the peak, right? And that's when you have to keep your ears open. Are people FOMOing in? Is it Lambo moon time? And you need to use the liquidity provided by those people coming into the market to get out, because we've got a fourth wave triangle confirming a fifth, right? So you have to take that advantage and that opportunity to rid yourself of future headaches. And then we'll come back into all of this and off we go again. Alright, so let's save this as a triangle, or put these into the triangle folder. But this will frustrate people in different ways, because this could still be misinterpreted, right? If you get what you mistake as 5 waves, you could say 1, you could say 2, and convince yourself that this was 3, this was 4, and we've gone 1, 2 of a new wave of a fifth, and that could screw up your projections of where to look for the fifth. Okay, but all of that is no worth talking about until we get a confirmed 4, whether it's here, whether it's here. Once we get it, we can project the fifth. My what's the word? Preliminary. My preliminary targets are somewhere between 100 and 140k. Okay, for when it finally gets here. So that's the triangle. That drags us out into summer. That would likely brutalise the alt markets for a fair old while yet, and hopefully add to more bearish sentiment in the meantime as well. Alright then guys, that's covered everything I think I need to cover. I'm still siding with the bear case as the primary case. Everything seems to be continuing as planned. If this downward channel breaks, we find support, we bounce in an impulse, we can talk about the possibility of having found the bottom. But until that happens, continue to expect lower pricing and continue to be biased towards that way of thinking would be my advice. But this is not financial trading advice, as I say. Alright guys, take care of yourselves. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. If you're interested in becoming a patron, there's a link in the description box below for you to follow, have a read of the tiers, see if there's anything you're interested in. And if you're not following me on Twitter yet, please do so. There's a link in the description box below. I will always post on Twitter when I upload a new video. And as always, thank you very much to my Patreon subscribers. Take care of yourselves guys, all the best, bye bye.